This is The Future of Money, a podcast where we hope to educate and get educated about the new world of blockchain and digital money. And my name is Eric Den Boer, and I will be your host. Welcome back to the blockchain, The Future of Money. Again, with us we have Craig from Goki. And as promised, when he was here the last time, we would actually start talking a little bit about Daos and NFTs. If you haven't seen episode 5, go back and take a look at it. And NFTs in real estate. But before we start, I want to go ahead and let you guys introduce yourself really quick. We can start with Jasper.
Yeah, I'm Jasper. I'm happy to be back on the pod. I work for KUAF doing community engagement, and then I do some music stuff and all that good stuff. So yeah, happy to be back.
Yeah, you got your own band, right? Or
yeah, well, I'm an artist myself, so
okay.
Yeah. Mm-hmm.
All right, cool. And Craig?
That's awesome. I'm Craig Immel. I have a project I've been working on building called Goki, but co-founder of Blockchain Northwest Arkansas with Eric here, and glad to be here. Great to meet you, Jasper.
For sure. Goki, is that the building that's like right up the street?
No, we don't have any buildings.
Okay.
Well, not yet.
Okay.
But,
Right.
Well, we have been talking about NFTs a little bit. Actually, I think we did that in episode 3 with one guy. But those NFTs were more in the world of arts and stuff like that. But we're also going to talk a little bit about NFTs in the real estate world. But we're definitely going to talk about DAOs. But before we do that, Lee was with us the last time, and why don't you just give us a recap of Goki and what it does? So Jasper is with us, and then we'll start talking about DAOs.
You bet. Twist my arm to get me to talk about Goki, I guess. So Goki is a project we founded. Really, I founded it, but we've got some other people on board with us now. And it was originally set up to kind of address this big challenge happening in the housing markets, but really real estate markets as a whole. Like more and more, just kind of people of average means are having trouble accessing home ownership or property ownership. So I've been in the real estate and construction industries for a long time, but I've also been really interested in blockchain and all the various, almost infinite number of applications for it for 5 or 6 years now at least. So, but basically what we started coming up with was the idea of like using smart contracts in these processes so that, two people could interact in a more secure way because, their intentions and their payments to each other and everything's recorded on the blockchain, right? So usually in a smart contract, they're transferring something of value between each other. So making payments, maybe using some type of cryptocurrency or, a classic example is, using a cryptocurrency like ADA or Ethereum to buy another digital asset like an NFT, right? So the theory being that, if two people want to interact, like I want to buy a house from you, instead of using like the traditional system. Maybe I don't necessarily qualify through the traditional system because I have a lot of crypto and I have income from crypto that the bank doesn't really know how to underwrite, so it makes sense for two people to interact more on a peer-to-peer basis. So we wanted to start the idea of creating a system to facilitate that. So but one key component of it is using NFTs to represent ownership of property in the first place. And so maybe that can mean an NFT that represents kind of the fee simple ownership of a home, or maybe some other right within that, like an option to buy the house later, or a right to live in it for like a year or something. Like that can be represented by an NFT.
Wow.
And it can be something, like if you've rented a house before, usually in the rental agreement, there's something that says, you can't sublease the house to someone else, but like using an NFT or something, if it's okay with all the parties involved, you could easily transfer the right to use that house. Like say you own a house for a year and you're going to travel somewhere for like 3 months. You're like, well, I need someone to take over my lease, and maybe that could be represented by a token. Anyway, there's like just tons of things you could do with all of that. So I've always been really interested in like all the different applications for NFTs, aside from just art and like the growing space of like music. But I know you had Focher on, and how they're using NFTs to document, like journalists are using this tool to document historical events and things that are really important, like maybe a journalist witnesses a war crime or something and snap a picture of it, and it's an NFT on the blockchain, can't be changed. It's like
we did mention the
stuff.
fact that NFTs creates the ownership. So that's the really interesting part of all of it. Yes.
I have so many questions. Like, I'm curious, are like how like is the contract based like NFTs, like are they like becoming more and more recognized like by like lawyers and like by like law precedent, if that makes sense? You know what I mean? Does that make sense? Like if we sell a house to each other and then like I go back and I'm like, nah, I don't want to do this. I mean, it's just an NFT I signed. It's not like, you know. Like, is that recognizable?
Yeah. So, like, within the U.S., I think like 4 or 5 states now have recognized, like, basically they had to pass legislation that says a smart contract can have the same standing in court as like a copy of a paper contract.
It's binding. So
it's kind of like it's a hard market to crack in the U.S. because it's state by state, and in the case of real estate, sometimes it's county by county.
Wow!
So it's a very fragmented type of space, but that kind of thing is happening. So
is Arkansas one of those states?
I don't think they are yet.
No, I don't think so either. I haven't read anything.
I want to say Wyoming is one of them. Wyoming, surprisingly to a lot of people, because people think of it as like cattle country and ranching, but they're kind of like. Kind of like the Delaware of the West. Like in Delaware, a lot of big multinational corporations set up their corporation or LLCs in Delaware because it's just pretty favorable environment to corporations. And so in a lot of ways, Wyoming has worked to position themselves as kind of like the blockchain governance capital.
Yeah, they're kind of the
West.
Forerunners, I want to say.
They've
they're
passed
very open to blockchain.
20 or 30 or more pieces of very specific legislation to help facilitate all these kind of things. So also I think Texas maybe is one now, and Arizona. Texas is trying to become kind of a home to a lot of like Bitcoin miners. So they're kind of getting dragged.
I feel like, we talked about that. Yeah.
So it's kind of everywhere, but more and more states will start to recognize that. So.
Yeah, that's super interesting. Well, I know you have more questions.
Oh man, I'm trying to think. Okay, so like if we're at a space right now where that is like can the contract within it be like easily changed as well? Like, I mean, I guess you mentioned that like it could be transferred easily, but like can the contents of it like be easily changed? Does that make sense?
Yeah, I mean, it can be as long as both parties
agree.
Agree to it for sure. But no outsiders can change it. And not one party can change it unilaterally.
Yeah,
just like a real contract. For sure. Really. So.
I guess the thing that gets me is that like in some ways like this allows for more like ownership, like movement, like more like rights to be in like the people's hands, right?
Yeah.
But it also like in some ways like requires a little more trust, right? Like if you make the contract and like I guess we're creating this contract together. It's not like, all right, you're selling your house to me and it's like you've made this like contract and there are like clauses in it that like I don't even know or like I don't do I even understand how to recontract? You know what I mean? Like, does that make sense? Like, it's like with lawyers, you kind of like trust that like they do all the nitty gritty of like.
I think what we're going to see is websites that you go in and there will be checkboxes, and both of you have whatever checkboxes you both have in there will be in the agreement.
So like the agreement is becoming more like simpler to like understand and like work through like to the point where I don't need like. A contract lawyer.
Yeah, let's call it user-friendly.
Yeah. That's a good way to put it.
So the contract is the smart contract, it will have an interface. Like, so a smart contract on its own, just standing on its own, is just lines of code.
Right.
And they're
Okay.
hard for people to read and normal people to read and interpret. So basically you have an interface that, we say, okay, Craig and Jasper are going to do some kind of deal for this property at this address. Here's the legal description. Here's the payments every month. Here's the total payments. And when both sides totally fulfill their obligations, the smart contract, it's basically a program. So it's programmed to exchange the token that represents the ownership of the house to me at the end. So, in one way, you have to trust that the contract itself is valid and legally binding, but at the same time, when you sign a normal contract with someone, it's you can read it all, but just because you're in a contract with someone and it's on paper and you both signed it doesn't necessarily mean the other person is going to fulfill their obligation at the end of it. They might say, well, I'm not going to send you that token now, take a hike. And so the program automatically sends it to you. So you, in some ways, you're creating more of a trustless system.
Yeah,
that makes sense.
Yeah.
What does this mean for banks and mortgage lenders and even title companies that the kind of middle people who's and even real estate agents really what does this mean for those? Do you see that those entities adapting to this and taking it on, or do you see those entities fighting this and trying to keep the way that it is now? Does that make sense?
Yeah, of course. So I think
And what have you seen so far?
So every day, every week, I see interesting developments. So first of all those types of parties, the title insurers, the banks, the agents, they all have kind of different motivations and different roles, obviously. So starting with the title companies, right after we launched, we started talking with some title insurance companies that reached out to us, and they're like, yeah, we talk about this all the time. There's a huge, I probably won't say their name, but one of the largest title insurers in the country reached out to us, and they're also one of the largest mortgage lenders. And they're known for doing digital mortgages. The whole process is pretty much online and digital.
Oh, wow.
So they're like, okay, how does this work? Because when you're a title insurer, a big part of your job is looking at the chain of title, and it's almost like the original type of blockchain. It's this person owned it, then they sold it to this person.
Yep.
There's a timestamp, and it's all recorded, but it's recorded in a centralized location, right?
Yeah.
So it could potentially be exposed to fraud and things like that. So, their job, and they have a lot riding on this, is basically they're ensuring that there's not been fraud in the past, and that some guy isn't going to come out of the woodwork who says, my family owned this property 20 years ago and they left me out of the will, and now I'm going to make a claim against the property. So so they're really interested in blockchain technology.
That makes sense because it's more secure. The chain is more secure than
it's immutable, and it's visible for everyone to see. So where the process right now of depending on what kind of state you're in and how the state's required to do it, or how the process is required to go, it takes time. It takes maybe 7 to 10 to 14 days at a minimum to research the title and write up the policy and everything. So, that just adds time and friction to the whole closing process, right? So, and then you think about a real estate broker, they want to just get deals done and get financings, help make the buyer and seller come together. And a lot of times that means helping them find the right kind of financing for it. So if it's a non-typical type of buyer, or maybe a non-typical kind of property that the bank is, not super excited about taking as collateral, so maybe you need alternative or creative forms of financing. So maybe this could actually help brokers. The lenders, I'm not really sure where they stand. I think they're kind of trying to figure things out.
Yeah.
But it just yesterday, Goki's compliance manager sent me some links. The FHFA, Federal Housing Finance Authority, which underwrites a lot of loans.
Yeah.
Basically, they just created a whole office of like fintech innovation. And
Oh, wow.
they're putting out a call for public comment, like, okay, you guys who are dabbling in the blockchain space
That
and
is
trying to figure this
interesting.
out.
Yeah, that's super
Yeah.
interesting.
Yeah, like
I
we
did
want to
not know
hear,
that.
what do you guys, let's create best practices together is
Yeah.
basically what they're asking for. My compliance manager also is an underwriter at a local credit union. And a lot of the credit unions are setting up these digital asset type of programs within their businesses. So, one example, there's a bank in Tulsa, and it's one of the first chartered banks to do this. Like basically, you can do like you can deposit with them, and they can open up a Bitcoin wallet for you, and you can put some of your savings into cryptos.
Wow.
And it's right now, it's
Another
like,
first,
Yeah.
right?
yeah, I mean, every day it's something. So
Yeah,
like,
it's
Are we
like,
seeing
literally-
Oklahoma starting to, copy Wyoming here now?
well, it's surprising, but
Yeah,
it's
that's-
funny though. Like the bank that's doing this in Wyoming has some business relationships with a bank in Wyoming too. So I think like that's probably where. Maybe
Oh, you mean
they
the bank
started
in
getting
Oklahoma is connected to the bank in
Yeah,
Wyoming? Okay.
yeah.
Wow.
Yeah. All right. Oh, that's
Yeah.
fantastic.
So I mean, it's changing
Yeah.
very,
Oh, yeah,
very
yeah,
quickly.
yeah.
So and I think it's probably going to be one of those things where like I think you guys were kind of joking about this in the last episode where it's like, oh, email, this is a passing fad. Why not just write a letter,
Yeah.
And then like people are like, well, okay, people might take it, but it's going to take 20 years, but
Now
and
it's-
then
No,
a few
the-
years later, everyone.
Just in the time that we have been doing these podcasts, we're seeing enormous steps.
Yeah, that's 100%.
And
But
it's
yeah.
it's amazing.
Yeah.
All right, well, we've been talking a lot about this, and so let's look at your organization. How does GoKey work? And we know that you guys are looking into the DAO structure.
Right.
So let's talk a little bit about DAOs. So follow us. DAO means decentralized autonomous organization.
Right.
What does it mean?
So that means basically you have an organization, right? That part kind of speaks for itself. But where the decentralized and autonomous parts come in, it's that this concept that a group of people, think of like people who are anonymous, on Twitter or like in a Discord server or something like that. They can still interact together without you don't necessarily need to know who they are. Like these people or accounts, they kind of build up their own kind of reputation over time. But the decentralized part of it is what's the most interesting. And it really is the idea that you can have an organization, whether it's like just some sort of a nonprofit, a business, something that would normally be organized as a corporation or an LLC, which is the opposite of decentralized, right? It's a very hierarchical type
Yeah,
of
if you
structure.
want to look at it, one of them is like more of a pyramid.
Yeah.
With your boss in the top, and then you have everything under there.
Yeah.
But the decentralized is more like a round table where
Yeah.
everybody has a say.
Yeah, it's much flatter, So like you could be the original founder of a DAO, but then, you might get out there and say, hey, I'm thinking about starting a DAO and based around these different values or this kind of a mission or here's what we want to do. Are you interested in joining? And then together that group of early founders can kind of help set the initial rules, like who can join, what does it take to join?
Oh, wow.
And what do we want to do specifically? So, but the idea being that a great example is like a sports team. So a group that, a partner we have that is setting up some tooling to enable people to set up DAOs easily on the blockchain.
Yeah, actually, I was watching a YouTube video yesterday about it's a place called Aragon. You can Google it, Aragon DAO, and in there you can actually start creating your own DAO according to the rules that you want to set up.
Yeah.
It takes a little finagling. So if you're interested out there to create your own DAO, look up Aragon. That's a good start.
Right.
So this is like you're literally creating like an entity of some sort
Yeah.
with individuals who necessarily don't have to be together, but are together.
Yeah.
That's super interesting.
They're just a community. So
Yeah.
think of it as like an online community that also shares. I'll use the term bank account just because it's easier to get people's head around it, but
Yeah.
like a shared treasury. So, or a shared crypto wallet.
Okay.
Yeah.
So like no individual person can just spend funds out of that treasury. Like basically, here's an example of how it could be set up. So basically you have a governance system. So like everyone in the community can vote. Just like voting in real life, though, it's turning out that a lot of people are sort of apathetic, and sometimes it's hard to get everyone to participate the way they should. But if you can get the right participation, people can say, look, we want to support this project. We're going to send them some tokens for whatever reason. And using a platform like Aragon or what we're using on the Cardano chain called Clarity Protocol, same type of tooling. Basically, there are smart contracts that underline this or underlie it. So let's say, okay, if the vote is in favor of doing this, then the smart contract will automatically deploy and will move these funds to this wallet. After you have like 2 or 3 signatures on the transaction from within the DAO. And the community itself votes on which DAO members have the authority to sign the contract. The smart contract transaction. So, but DAOs can be used for all sorts of purposes. So one of the most interesting ideas I've heard, so this partner we work with is a former professional soccer player, and he's playing soccer, scoring goals. He's like, dude, what if you could incentivize players by like every goal they score instantly, like they get paid, like crypto drops into their wallet from the team, as opposed to like, you play so well during the year and, after 2 or 3 years you renegotiate a contract and no one really knows what's going to happen. It's kind of like real-time incentives. But he kind of shared the idea with me for the first time of like a DAO that owns a sports team. Mm-hmm. So, and in fact, like a DAO recently tried to buy the Denver Broncos. The Walton family actually ended up like buying them. But
wow.
But imagine like a community. So like, the Green Bay Packers, right?
Yeah.
Which are they're one of the OG football teams, but they're actually community owned. So like, they're not like a corporate owned team, like the community owns them. That's why they still have like a small old school field and or stadium and everything. But, think about like the community truly having ownership over the team. And as a DAO, like fans can be a member or if you're a season ticket holder, if you're just a fan, maybe there are different tiers of membership. You can vote on players. You can vote on uniforms. You can vote on what kind of concessions you want to have. And so
that's really interesting.
Yeah. And that's just one example of something that this ownership type of structure could help facilitate.
Yeah, those are all the pluses. Of all of this. There are also some limitations and some drawbacks.
Yeah.
One of them is, of course, if you have someone at the top, he will make the decision and that's done. And it can move much faster. With a DAO where you have several people, then you have to kind of make sure that everybody do vote, like you said. But also the information comes out to everybody. And when you send an email to everybody, they might not read the email or get to it. So you have some of that. The administration's part of it a little bit too, but education and the speed and that stuff. Yes. Yeah.
I was gonna ask, like, is it like, if they're sharing some sort of currency, is that taxed? Is that how does that work? If because normally when you set up like a business or that's what my mind is going. Like this is like you can set up a business or even like a nonprofit and if use these funds to go create something and make money off of that and then can profits be shared? I I don't know. Like, how does
that question.
How does
Yeah.
that work?
Yeah, so that's a good question. And I think it's one of those instances where, the technology is pretty far ahead of like government regulation and things like that.
Yep.
So, there are states now where you can pay your state income taxes with crypto. Like Colorado is one that you can do that. But it's kind of all over the place there. So, like an example. So what Goki's DAO is kind of conceptualized to do is to have community owned and managed real estate. So like, let's say we were to buy together like a 20-unit apartment building.
Oh, that's super dope.
And we have, so the ownership of the building is spread much more, democratically amongst a lot of people.
Yeah.
And that can even include the tenants in the building. So like, think about like if you're a renter in this building, like I think everyone that's ever rented has rented in like kind of a low budget place where the landlord he makes all the decisions, or she, and sometimes makes questionable decisions as far as like maintaining the place and everything like that. So our vision is to like help fill this gap between like either being a renter or an owner, and the renter's like basically you rent and never have anything to show for it when you walk away. But like if you're a member of a DAO that owns a building or owns multiple buildings, like, you can build up some sort of equity as a small owner of the organization. So, but, if you earn some tokens that have value as part of that process, and usually it's when you take them to an exchange and try to cash them out for like fiat currency like a US dollar or whatever, it typically creates some sort of taxable event. And so it's kind of up to everyone to like seek out their own tax advice and legal advice on that kind of thing. Yeah. It's a messy area, and it's really hard. It's hard to find a good tax guy that really understands this.
Yeah, one of the things that I've learned a little bit recently was the difference between tokens and crypto. So crypto is more like money, or but tokens could be more like when you. Here's an example that I heard that I found really interesting, was that you go and buy an airplane ticket and you fly with Delta, let's say, but then you accrue Delta points. And the Delta points are kind of like tokens.
Right.
Because eventually you can take those tokens and turn that into something, or you can use those tokens in the form of a DAO to use those tokens to start voting in that DAO that you belong to.
Right.
So to me, that was a very, very good example of the difference between like the cryptocurrencies and the token system.
Token system. Yeah. So the tokens can have like a lot of different utilities. And like within a DAO, typically, a lot of DAOs will have what's called a governance token. So like you can have, say, issue 1 million tokens or whatever, and you can maybe have 1 million different members who each have one, or you can have different individuals or members of the DAO can have different amounts of tokens.
Yeah.
And a lot of times your voting power is tied to how many of the tokens you have, right? So, but it can also be, so that can be a problem, right? If like one person has 999,000 and then you have like 100 people who each have one token or whatever. Yeah. And so you still are kind of centralized. So it's like you have to kind of find this sweet spot between, having like a significantly decentralized way of voting. But then you can also have this problem where, say, one person comes in and buys a huge amount of governance tokens, and then
I was going to say, like, can people buy other people's tokens? And
you can. Like the idea is like they're freely tradable, but what a DAO could also do is set up their voting mechanism and their governance in a way where it's not only a function of how many tokens you have, it's how long you've had them. Because like if you think about if you have 1,000 members who've been in a DAO for 5 years, and then you have one guy who comes in and buys a majority of tokens somehow, but he's only been there for like 5 days.
Yeah.
It kind of makes sense that the people who have been there a long time have kind of more skin in the game. And so sometimes the length of time that you've held the tokens can be weighted.
Yeah, and how many votes you have put in, and I mean, there's all these criteria you can set in a DAO, like how engaged are you in this, and all that kind of stuff. So someone that's been there for 5 years only has 100 tokens, but he votes constantly. He is very engaged in the DAO and helps out and all that kind of stuff. And then there's a guy coming in and he just bought 5,000. The guy that actually has been there for a longer time actually has more, credibility, so to speak, right?
Right.
So the thing with the DAO that I find very interesting is the fact that it is decentralized.
Yeah.
There's nobody that is like, oh, I am the king on the top and I make all the decisions. No, it's a community thing. So even the guy that had been there for 5 years had 100 tokens and had a lot of credibility, and the guy that had been there for 5 days had 5,000. They both have weight. They have something to say.
Yeah.
Right.
Yeah.
So that is the part of the decentralized organization that I really like.
Yeah.
So
Last question, and I know we gotta go, but I wanted to ask. So like, if so let's say like I get my like 5 friends together and we want to set up a DAO. Like, do we come to you with like, hey, this is how much money we have to pour into this like wallet or DAO. Here's our list of rules that we want, like, and then we just come to you and then you set it all up. And is that how it works, or like?
I mean, I would be happy to like help you and share with you like what I know about it. But ideally, like once, let's say if you wanted to build this on the Ethereum blockchain, like you would find a service like Aragon, and there are quite a few others where, they'll basically step you through it. They're like, okay, who are the members? How do you want to set up the treasury? How do you want to set up voting?
There's several of them, and they have different wallets that you need to have connected to it, so that they see that you actually have the funding to be part of this.
Yeah.
And so there's a whole, and then also by setting up the wallet, it's like, okay, you have this amount of this Ethereum, let's say, but then if you want to get out to it, that actually needs to be sent back to you, or I mean, there's a whole lot of, but I think, like you said, look into like Aragon and some other ones, and that will help you out a lot.
But there are law firms, like if you're thinking about a big DAO with a lot of money, like if you're thinking about doing something like Constitution DAO, I don't know if you've heard of that one, but I think it was Sotheby's. They recently auctioned off like an original copy of the Constitution.
Oh, wow.
Yes, that's true. Yeah.
A lot of the bidding got really high. Like I think eventually it went for like 45 million or something. But some guys got together like, let's form a DAO. You guys all have a lot of crypto. Let's pool our resources and let's see if we can buy the Constitution. We'll be the first DAO to like buy something like that. Ironically, because all the governance and all the treasury is on chain and fully transparent to the world, it's kind of easy for someone to look and see kind of like what you guys have agreed to make as a maximum bid and outbid you. And I think maybe that's why they actually...
That's another drawback. There's because of the transparency, that's in the DAO, because it's right there for everybody to see. Yeah. But maybe that could change too, depending on, if there are DAOs that are going to be built on different kind of blockchains too. And stuff. So we don't know. We still are very new in this space.
Interesting, man. This is crazy.
Yeah. One I would encourage you to look at is a community-based DAO right here in Northwest Arkansas called OzDAO. Okay. And there's a Discord server that we can send a link to. But basically, it's, I don't know, maybe you would call it a social DAO. There are lots of different types. But it's kind of modeled after what we've seen for like city DAOs.
Yes.
So like Austin has a DAO called ATX DAO.
Oh, wow.
And in the case of OzDAO, it's really, this Northwest Arkansas, Fayetteville, Springdale, Bentonville, Rogers is kind of several cities all in one region, but their goal is, and I'm a member as well, so I should say our
Same
goal.
Here.
Yeah,
we both are.
So basically, it's to spread education and awareness about Web3 technology within the area and like help more local companies embrace it. And everything from the smallest coffee shops and and bars to art galleries and the Fortune 500s. And
Yeah, so if you guys
all
out there are interested in learning a little bit more about Daos and stuff like that, go to OzDAO, OZDAO, and it's a Discord, and you can join them. And there's a lot of good people in there that could actually teach you more than we can. So yeah, definitely join them. At that note, I think it's time for us to close this. And again, thank you guys for joining.
Yeah, thanks.
And we will see you next time. Bye.